guys, it's Prefontaine with SmartRealEstateCoach.com. I got a couple questions that were emailed in that I want to put on the free site for everybody to see. Thank you, Lance, for sending these in. So the first one is, let's see, when the contract purchaser is making the first mortgage payment to the bank, whether it's terms or subject to, how do you handle that? Money order, question mark. Lance, if I understand your question, this would be if I'm taking over a house subject to or on a sandwich lease or other terms. How do I make the mortgage payment? Most of ours we ask for online access and they have no problem giving it to us. We also get signed the authorization to release information sheet. You got to make sure you have that. So when my bookkeeper calls the bank, she faxes that in first or emails that in, and they understand that she can talk to them about that loan. So she's almost acting like a property manager. They don't care. So the answer is we usually do it online. I don't do it with a money order ever. Online or check. Okay, that's it. Or they do the the ACH. Let's see. And how do you make all future payments without triggering a due on sale clause? This was my biggest concern before I started doing these, Lance, and we've got about 22 of these now that we pay on. Some we even started as sandwich and then transfer it to taking the deed subject to, because then they had some build up credibility with us and they did that. But I can tell you that they don't care. That I'm not going to say never because I'm not the bank, but it has never triggered a due on sale clause for us or any sellers, and quite frankly I think Ron in 30 years hasn't had that experience. Why? Because they're not in a real estate ownership business. They just want to make sure that the loan's paid. Now I'll give you an example of that. On the 4 that we took over the deed to subject to after having a sandwich lease, there's 4 of them in the last, I'm looking at my board, 6 or 7 months. We even called up to lower the insurance rate that was being escrowed. So my concern was, will that insurance change trigger it? Because it's a different ownership, it's a different additional insured on there. And the answer is, and Ron told me this day one, but until I did that I didn't realize it was this easy. The answer is the insurance department doesn't even talk to the regular department. Even in a small private bank, we had this example. So we took the loan subject to, right? We took the home over rather the deed, and the payment was being escrowed, but we knew we could lower the payment by using affinity. We lowered our insurance costs by 25 to 50%. So obviously we just made our spread better, right? And when we called to do that, there was no trigger. Affinity direct bills them, and the policy holder just changed. So the due on sale clause doesn't get triggered by and large. I'm not going to tell you it's never going to happen because that'd be incorrect to say that because legally it's in there. Won't the bank see it? Not the client's name or the ACH account. Again, they don't care as long as they're getting the check. How do you not tip off the bank? Yeah, they're all the same questions. So don't worry about that, Lance. Go get the deals and we'll do them together once you jump into coaching. But these were good questions and I wanted to make sure everybody got the answers to them. Thanks for sharing.